The Taiwanese index is up 0.3%.
Zee-Sony, which were long awaiting an approval for their merger, have finally received the nod from the Competition Commission of India, and this is a big positive.
Sources in the company are telling us that they are expecting to receive at least 1,000 crores as additional support under the ECLGS scheme.
It's record high monthly sales for Class A truck orders in North America. The Nifty is up 113 points right now and counting.
Remain cautious, and I don't think the Fed's rate hikes have obviously, I don't think they're going to go slow. The Fed's war on inflation, that's resulting in this interest rates going up globally.
Big reaction to persistent on the back of a JP Morgan upgrade. They've upgraded the stock to overweight now from neutral, and they've sharply raised the target price to 4,100 versus the earlier target price of 3,900.
Godrej Consumer is losing in trade, understandably, because of its second quarter update that the company has reported.
Currently, as we speak, it's 130 points higher in the Nifty.
Hello and welcome to Closing Bell. I'm Prashant. With me, my colleague Reema, and of course Nigel joining in from our studio, from our newsroom as well. Good afternoon, guys. I mean, the market's come off sharply. It is coming off sharply as we speak. I mean, just 70 points left on the Nifty now. We're at what, 17,348. The day's high is a little above 17,431, 430 or so actually, and it's actually quite a bit of come off that we've seen. Just a couple of quick points. You know, we were talking about in the morning how you may find some resistance around 17,400. That has happened. 17,421, by the way, is also the 50% retracement of the fall that we saw from the 15th of September to the 30th of September. I mean, if you want levels, the high on the 15th was 18,096. The low on the 30th was 16,747. The 50% retracement is basically almost exactly today's highest level. And we're getting the next leg of sell-off as we kick off this edition of Closing Bell, by the way. What else are we tracking? Metals, real estate and IT are the three sectors which are doing well. But even there, I mean, you look at metals, which out of the three is doing the best. There is resistance which is starting to come through and stocks are turning lower. All eyes really on the US markets in terms of whether there will be a follow-up or not. I mean, markets in the US last night did a big about turn, which is very positive. Despite all reasons for the market to head south, and they were south, there was a pullback which happened and the market closed a quarter percent lower, absolutely flat. Will we see a follow-on? We should ideally see a follow-on higher in the US. And if that were to come through, I mean, I think that puts us in a good place. Oil, to my mind, is the big talking point. Maybe it already is the talking point. If it starts to break 96, from last week's low, it is already up almost $10 per barrel. If it starts to move even higher to the 96 kind of levels, you're basically looking at Brent oil prices breaking above a downward channel which has been in existence, which has been in place for the last 4 months or so. Could we start to see that? If we do, I think that remains the number one risk for a big importer, oil importer like India. I mean, it's got implications for the rupee. It's got implications, of course, consequently for the equity market as well. Reema, hi.
Hi, Prashant. Right now, what we're going to be watching is whether this dip gets bought into or no. The first dip around 11:30 saw buying. Right now, again, we've fallen quite significantly from the day's high. Anuj is also here with us. Anuj, we've also got the weekly options expiry, which tends to add its own complications.
I think that also has played its part, Reema. Afternoon. The texture is buy on dips. I think that was the basic difference between Tuesday's trade and this morning's setup. On Tuesday, you had a reasonable degree of confidence that you could go and chase the gap up. Today, you didn't want to do that. Today's texture is buy the dip. The range has been respected so far, 17,340 to 17,440, going by the options data. And if that range has to be respected, my sense is this dip might get bought. If it doesn't, then below 17,320, maybe you would want to sort of exit your positions. The Bank Nifty has been outperforming despite HDFC Bank's decline. The last 1 hour decline that you're seeing is purely because of HDFC and HDFC Bank. And that happens on expiry day. Somehow these two stocks tend to impact the market. On the Bank Nifty, the level to watch is the 39,840. That's the 20-day moving average. On the Nifty, that level is 17,490. And I think Prashant mentioned crude. Also keep an eye on rupee, because a combination of higher crude and higher rupee could actually hurt us a bit. So just that's a bit of a factor that you would want to keep on your radar. What the market might do from here on is that mid-caps may take over. The Nifty has had a decent run. As long as 17,200 is holding, my sense is you might see some time between 17,200 to 17,500 on the Nifty, and in between, the market breadth may remain strong and the mid-cap index, or mid-cap stocks rather, may outperform.
Well, the mid-cap index has taken over, right? This week, the mid-cap index is up 2.5% versus a 1.5% gain on the benchmark indices. I'm also going to be watching out for the FMCG stocks. So just as a representative, keep your eye on the Nifty FMCG index. And there, the outperformance has started waning. So week to date, we've got the Nifty FMCG index, which is down about 0.5%, which compares with a Nifty gain of about 1.5%. And remember, the Nifty FMCG index has been a rank outperformer. It's up close to about 17%. We've got weak business updates from both Marico as well as GCPL. Marico is saying that we're going to be seeing low single-digit volume growth, which compares with a high single-digit kind of volume growth that it enjoyed over the last 3 years. Godrej Consumer also indicated about a mid-teens decline in EBITDA due to high-cost inventory, upfront marketing investments. So there are concerns on the volume front, rural market distress, as well as on the margin front. So will this FMCG outperformance come under pressure? Will the street start questioning it? Because the Nifty FMCG index has outperformed the market by more than about 15% since the start of the year. So just watch for these particular stocks like HUL, Britannia, Tata Consumer. All of them are under pressure for the last couple of days. But Nigel is at the dealing room at CNBC-TV18. Nigel, what's the buzz like? What have you picked up?
Well, Rima, just a quick point earlier today. The point that we made was you'd rather not chase the gap up opening. You look to buy the dip if at all. So that's something that appears to have played out. You look at the Nifty intraday chart, that'll tell you the picture. And in terms of the Nifty bank, actually, that's the one that's taken a harder knock. So clearly, we're at a very, very crucial point. The 17,300 mark on a closing basis will be eyed. The bulls will be hoping to defend that mark. Plenty to talk about in the final 60 minutes. First up, let's run you through what all we have lined up on the show for you. It's a good day of trade for the Indian markets with the Nifty above the 17,300 mark. Among the broader markets, the mid and the small caps, the clear outperformers of the day. Autos, IT, metals, and realty stocks shine in trade. The Zee Entertainment stock gains after the Competition Commission gives in its assent to its modified merger proposal with Sony. Excerpts see that the deal offering significant synergies and the stock value. A detailed analysis coming up on the show. And JP Morgan ups their call on Persistent Systems to an overweight rating. We get to details and the rationale behind this in our special segment, Standard Brokerages. And our Alpha Manager of the Day, Vinay Jai Singh of JM Financial Services, will be joining in to talk all things market later on. All this and much more lined up in the final hour of trade.
All right, it's a packed show as always. Well, how should you position yourself in the last hour of trade? The market's got 60 points now, so it's almost a complete giveaway so far. Rahul Mohinder of VeraTechIndia.com is joining us. Rahul, good to have you with us here. What do you make of this move lower, and would you buy this dip?
Good afternoon. I think, first of all, we've got to recognize there's been a gap up, and what we are witnessing probably is the fact that we didn't follow through with that gap up opening, and we've trickled down and we're almost heading towards filling that gap. My hunch, we will close lower, probably lower than 17,300 as well. So I think there's no harm if we even fill up the gap, towards 17,250 to 280 levels. So I think that's a definite possibility that does not throw an uptrend out of gear. But if you're just talking from a today perspective, I think we could have a bit of a softish closing. Even if we look at the Nifty Bank, there too, I think 39,400, that's the key level. We probably have to get above that to see some kind of a spike up. So whilst I may be a bit bearish for the day, I think what I recognize is that the kind of consolidation or the price action and volatility that we've seen over the last couple of sessions with all those gaps around points to the fact that there's still this possibility of a final up move coming in the next couple of weeks. So don't just look at the market from a today perspective. One has to give it a bit of time. Should we break the 17,250 level, I think you've got to have a plan B, because there's another gap lower down at 17,000. So one has to have a bit of a cushion and a plan to buy the fall rather than trying to buy the up breakout.
Okay. All right, Rahul got that point in terms of the index. Well, let's get in Devin Chowksy, who's joining us on the show as of now. Hi, Devin. Good afternoon. Well, I wanted to ask you about a couple of these metal stocks. They saw the sharpest correction, and then they've seen a bit of a bounce. If the global markets are going to be in a bit of a tizzy, and we're going to see a harsher stance or a more hawkish stance coming from the Fed, it's going to be a bit of an issue, right, if there's going to be a slowdown. How do you approach them? For the time being, though, they're the biggest gainers. Hindalco, JSW Steel, both of them running away.
Hey, Nigel, good afternoon. So I think from the India domestic point of view, I think the metal story remains intact. I think it is not changed much. And even if one considers the extremely sharp amount of, the what we call the input cost, which basically troubling this particular industry as of now, I would still think that India is in a relatively better position as far as most of this metal company, both the ferrous as well as non-ferrous companies are concerned. The major problem comes from the global markets, where the higher amount of energy cost and resultantly, lowering the entire demand scenario in the global market is basically something which is causing some of the companies, as far as the global operations are concerned. In this kind of a scenario, while when you are not doubting the demand situation in India, we are definitely mindful of the situation of margins, and that is where possibly one will have to tread a little bit more careful. Most of the metal commodity stocks have been languishing for some time now because of this particular reason. And every quarter passing by would possibly make, some difference as far as the stability into the margin front is concerned. I would like to believe that probably with the lowering of the crude oil prices, you should be seeing a relatively better comfort as far as the margin aspect is concerned in these companies. Maybe second half of the financial year, along with the demand scenario remaining strong in India, should see better price as far as stocks are concerned.
Okay, bullish toward on the markets right now, but let's get to one of the top stories of the day. The Competition Commission of India has given the go-ahead for the Zee-Sony merger, albeit with certain modifications. Vaishta is here. She's at the big wall and she's going to tell us more on this story.
On the 4th of October, Zee and Sony had finally received the much-awaited approval for their merger from the Competition Commission of India, or CCI as we know it. This brings a major sigh of relief, as the CCI approval is usually the primary hurdle and takes a little longer. However, the approval comes with certain conditions to be fulfilled by both Zee and Sony. Prior to receiving a CCI nod, concerns were cited towards the merged entity's market dominance in TV viewership, high fee from advertising, and on the channel pricing. Both Zee and Sony had made some voluntary submissions to the competition watchdog, which could include the closure of some channels. And post receiving a satisfactory revert from Zee and Sony, the Competition Commission of India gave a go-ahead. Now let's see how the merged entity would look like. In terms of TV viewership share, Zee and Sony will have 26%, which is to be compared with Disney and Star viewership of about 20%. In terms of digital market though, the Zee-Sony combined entity have an advertising revenue market share of about 6% and subscription revenue market share of 18%, which is anyways lower than Disney and Star of 18% and 25% respectively. Zee's current shareholding pattern has a promoter group stake of 4%, while the remaining is publicly held. However, post-merger, Sony is expected to hold a majority stake of about 51%, while Zee promoters continue with a little less than 4%. And other shareholders, including Oppenheimer, will hold 45%. Mr. Puneet Goenka from Zee will be the MD and CEO, while majority of the board of directors of the combined company will be nominated by the Sony Group. And the new entity will now have a quite complementary TV network, 2 OTT platforms, which is ZEE5 and Sony Live, 2 film studios, and a vast library of programs. In terms of the existing OTT platform offerings that both companies have, the total subscriber base for ZEE5 plus Sony would stand at 21 million, next only to Disney Hotstar. Notably, the merged entity will have a total cash balance of $1.5 billion and the ability to gain from synergies in advertising and distribution and cost savings on content, employees, and marketing. While there are some approvals which are still pending from the shareholders, income tax, Ministry of Information and Broadcasting, and ROC, the analyst community don't see these as big hurdles, and find the current valuation of 15 times FY24 expected earnings as attractive.
Vaishna, thank you very much for that comprehensive report on the Zee-Sony merger, the CCI approval, which came through 2 days back. Devin Choksi of KR Choksi's is still with us. Devin, this was seen as a big hurdle, and now that the clearance has come through, a conditional one, it's seen as a major re-rating, candidate Zee Entertainment now. Your thoughts on Zee at the current juncture?
Yeah, good afternoon, Rima. Well, I think the important aspect is about the sub-licensing of the sports rights, particularly the men's tournament under ICC and also under 19 tournament. As we all know, I think the sports segment, possibly within the broadcasting space, carries maximum amount of, I think, the margins. And both even TV18 and Viacom, along with, I think, now in Zee and Sony combined together, I think they are basically fighting for this particular space, where I believe that I think Zee's position currently with the sub-licensing right that they have would be relatively more stronger. I would like to believe that I think going forward in the next 4 or 5 years, probably the sports segment would contribute significantly to the larger amount of revenue. And I think that's where probably margins are going to be talked about. So that could be the reason, one of the reasons maybe, I think, to see the re-rating in the stock price for timing.
Okay, all right, 280 on Zee. Now, another one which has been doing well from the morning, actually the IT index is doing well, but Persistent is doing particularly well. It's up 6%. Nimesh is here with a standout brokerage report on that name. Nimesh, hi.
Hi, Prashant. So, it's been a big outperformer today on the back of a JP Morgan upgrade. So, Persistent is up 6%. JP Morgan has gone ahead and upgraded the stock to overweight now from neutral, and they've raised the target price to 4,100. In fact, Persistent is now the only overweight stock for JP Morgan in the ER&D space. Now, 4 reasons they've identified on why they've upgraded the stock to overweight now. One, Persistent has a relatively defensive portfolio with exposures to software technology, BFSI, and medical clients. All are relatively more resilient compared to the other sectors. Two, they have the highest exposure to the US-based clients, and relatively they are better placed in terms of client spends compared to the European clients. Third, Persistent derives highest revenues in dollar terms, and dollar has actually strengthened against the INR in the last few months. And fourth, JP Morgan expects Persistent to record the highest earnings CAGR of 25% between FY23 and FY25. Now, compared to the growth, the stock is trading at a discount to peers like L&T Technologies and L&T Infotech, and at par with Mindtree, and at 26 times 1-year forward earnings. JP Morgan believes it's a good entry point, and hence an upgrade on Persistent to overweight now with a target price of 4,100.
Nimesh, thank you very much for that. Prashant, one of the other reasons is that effective 30th of September, Persistent also got added to various indices, not just Nifty IT, but even the Nifty Midcap Index, as well as the Nifty Mid.
Time ago. So that, I think, would be the bear side part of the story.
Okay, so the worst case scenario for the market, so the Nifty could be 15,500. Vinay, afternoon, what about the IT sector? Next week, we will have earnings from all the heavyweights, Infi, TCS, Wipro, HCL Tech, mid-caps like Mindtree and Sign too will be reporting their numbers. What should we expect?
So our perspective, whatever you're going to see in the IT sector in the next week is a function of how well the market did, or the economies did pre the war. So you won't see much of the order book coming down. Having said that, their outlook for the following 12 months may become a little more questionable. What I mean to say by that is, if you look at the 2-year and 10-year chart of interest rates for US, we are at a negative 0.4, 0.5 basis points. That, in my eyes, means that the GDP of US, after 2 quarters of contraction, for the next 2 quarters too, you could be at a flat level, which means the year 2022 may be a flat to a negative year for US GDP. And you'll start seeing the order book in the following year coming down. Hence, we would be underweight the IT sector as well. I'm not even getting the costs into the picture, because costs in a way may be bridged by the dollar going to about 82 or even much higher in the days to come.
By the way, look at rate gain. I think there's a huge block deal which has happened on rate gain. And it's I'm looking at some 73 lakh shares on the NSE. That's the total volume today, but and I think Nimesh had pointed this out as part of the D Street chatter that there will be a block, and that there's going to be a P investor who's perhaps going to be selling. The stock is up what 5 or 6% higher. 302, 303 is where RateGain is now trading at. Pretty much not at the day's highest point, but pretty close to that. The other one is Gokuldas Exports. I mean, I don't know what's happening there. Gokuldas is up 9%, almost 10% now. That's one of the largest apparel exporters out of the country, both US, Europe, etc. If you just go with industry-related news flow, you would imagine that they're kind of hurting because for the third straight month in September, apparel exports fell and fell sharply. But I guess this is reacting to something else. It could just be, reversal after the stock had lost quite a bit. I mean, the recent high was almost 520 or so. From there, it had fallen very sharply, and today it's coming back up. Any thoughts on, Gokuldas and textiles as a space? I don't know if you own anything in that in your portfolio.
We don't own textiles as a space in our portfolio, but I would kind of link this up to those companies wherein you're earning currencies on the dollar, especially specialty chemicals or agro companies, wherein what you're doing is you're manufacturing in the country and your end product is a high demand product in US. Then what happens is because the commodity prices are down about 30 to 40% from peak, the outlook there looks very rosy. So one of our biggest overweight positions really is in the agro specialty chemical space itself. But the argument would be the same.
Okay, all right. Vinay, what about in terms of the money that you all are managing? Have you all raised cash in the last month or so? If yes, currently, what is your cash position? What was it a month or so ago? And if you'll have raised substantial cash, then where are you looking at deploying it?
Sure. Thanks, Nigel. So we have raised some cash. We've gone up from 10% to about 13, 14% currently. We were waiting for, the Fed hike, after which there was a risk of trade, but, it's pretty quickly coming back. So we raised cash just before that. And where we sold out to was, some of our positions, like in the auto sector, moved too high. We are still grossly overweight the auto sector. But, some of the valuations moved up a lot. And as I said, in the IT sector, we've gone underweight. So we took cash out from that sector as well. Where are we looking at deploying it? We are looking at deploying part of it in private banks, tier 1. And we are looking at deploying it in the specialty chemical and pharmaceutical space. Pharmaceuticals, domestic, specialty chemicals, where we see a good export order book coming in. But again, we won't be in a hurry to deploy it because we think the markets in the next month or two could get us better opportunities to get it.
All right, on that cautious view, Vinay, thank you very much for joining in. He expects better entry levels for the markets in the next 1 month. He likes specialty chemicals, private banks, underweight IT, and he's taken some profits off the auto names. Get into a break. As always, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. And we'll also tell you what to buy today that you can sell tomorrow. Calls coming in from our technical experts. Welcome back. The mid-cap outperformance sustains. The mid-cap index is up 1.25%. And look at names like SpiceJet. That's rallied once more. It's seen a second leg of buying today. So SpiceJet has rallied close to about 9%. NFL has moved up 7% on very large volumes. And RateGain, a stock that we were earlier highlighting on the back of that block deal, is also shining in trade. But it's time now for a segment D Street Chatter, where Nimesh will get us insights into dealing room. Nimesh, what do you have for us?
Hi, Rima. So, looks like the market is facing resistance at 17,400 on the upside. That's a level where, for the last couple of times, we've retraced from those levels. That's been the case today as well. But it looks like the momentum is with the bulls and backed by the FI institutional buying as well. So, again, a day when the DI seems to be quite active buyers in the large cap names. That's the overall feedback. In terms of sectors, looks like the high beta is back in focus. So, real estate stocks are doing good. The sector of the day clearly seems to be metal names. All the metal stocks are buzzing in trade. Of course, the dollar index cooling off. That's helping the metal index as well. So that's one sector where there is a bit of momentum back. I guess from a momentum point of view and from Q's point of view, the quarterly earnings will be very important from here on. So next week, we'll start reacting to the earnings, and that's what is likely to be the next figure for the Indian markets. But purely from a flow point of view, looks like that momentum is with the bulls. And even in today's trade, the feedback is the institutional activity was on the buy side and domestic were quite active, buying into the large cap names.
Thanks for that. You know, that rate gain, the deal seems to have happened. Huge volumes, and you were pointing to that earlier.
That's right, Prashant. So now the data suggests that there is a block deal of 5% equity changing hands, and that was part of my chatter list as well, that there was going to be a large block very soon. To me, it looks like the large private equity investor was a seller in this particular block deal. I'm still struggling to find the buyers list, but looks like there's going to be a combination of FIs and DIs who participated. But from a seller point of view, it looks like the private equity investor was a seller in today's block deal. So that's the first one. In terms of other names, the first stock on my list today, apart from rate gain, was Zee Entertainment. That's been a talking point since morning. Huge volumes on that particular stock, and again, some bit of profit picking as well, because there was a bit of inclination of the deal coming through. So that's happened. Now the next thing to watch would be what happens to the Invesco block. The big chatter in the dealing room is that maybe one of the large bankers has been appointed for selling Invesco stake. So that could be the next big thing to watch out, and could be a potential near-term headwind as well as far as Zee is concerned. So that's the first one. The second stock is Ambuja Cement. Within the cement pack, that stock has again bounced back on very good volumes today. So it looks like the buying interest is back from larger institutions in Ambuja Cement. That's the second one. Third stock is Adani Power. It's come to my list after a very long time. Again, stock is locked at 5% upper circuit on good volumes, and that's been the indication as well that there is a bit of buying back in Adani Power. So that's locked at upper circuit today. And the last stock is Praj Industries. Within the mid cap space, that stock is buzzing in trade on very good volumes. I understand the HNI investor seems to be quite active in the stock again, and there is an anticipation of some sort of a corporate development as well post the Q2 numbers. So that's something to watch out as far as Praj Industries is concerned.
Okay, all right, Nimesh, thanks a lot for that. By the way, you're getting that move at around 3 p.m. odd. We are at the low point of the day. We're holding on to that 17,320. But if we close around these levels, well, it's par for the course kind of close. But the bulls will like to end a little bit higher from these levels. The bears will feel quite good. They're close to around 100 points off the high point of the day. Rahul Mohinder is back with us. Well, Rahul, it was that sort of a day. You don't have to go ahead and chase the opening. If you did that a couple of sessions ago, that was on Tuesday, you made a lot of money because it was a trend day. Today, clearly, that didn't work out. Your view on the index and a couple of your stock trading calls as well at around 310 today?
No, I think I'd probably add to that by saying don't chase the closing, because what could happen is a gap surprise again. So be mentally prepared that 17, 250, 280, those are levels which can be tested near term, but that doesn't shake out the possibility of an up move. I've looked at some individual stocks where I'd like to take a buy call on. So Bajaj Auto is one of those names. I'd buy with a 35.20 stop loss. I'm looking at targets to about 36.90, 3700. So that could be an interesting take there. SBI too, I'm going to utilize this decline as a buying opportunity. Keep a stop loss at 525. The stock could clearly get past the 550 level. So at these prices, I'm a clear buyer on both these stocks.
Okay, thank you very much for highlighting that. Let's also invite Ambrish Baliga on the show now. Ambrish, afternoon. SpiceJet has made a big up move today. There is a news about how the loan limit under ECGLS scheme for aviation sector is likely to be hiked, and that will provide SpiceJet the much needed funds for it to sustain. Is it a buy? What have you made of the news?
See, this news is positive for the aviation sector, especially where the companies are in fact cash strapped. But then I think it would be only sentimentally positive for SpiceJet, because looking at the sort of competition which is building up, I think Jet should come back on stream maybe in the next 4-5 months. That would again add to the competition. So clearly their loans will really balloon, and whatever inevitable has to happen, we are only delaying that. So I don't think it's too positive for SpiceJet. It's just giving them some amount of lifeline. So for investors, I think it's a good opportunity to exit. If we see some more upside from here, it's a good opportunity for them to exit.
Good opportunity for them to people to exit. You've got a stock on your radar which you like, KEC International. Ambrish, good afternoon. Do you want to outline the rationale?
Yeah, in fact, that's a leader in EPC projects of high voltage electrical switching and distribution substations, distribution network, optical fiber networks, telecom towers, urban infra, and oil and gas pipelines. It actually operates in about 110 countries, ranks among the top 50 most sustainable companies in India. The company has diversified into 5 new businesses, de-risking the revenue growth traction. In fact, focusing on non-T&D and civil. And in this, we have seen the railway segments especially showing promising growth prospects. And if you look at the revenues from the T&D segment, that's reduced to about 50%. It was about 83% in FY16. That's reduced to 50. And the management estimates that this will come down further to about 25-30% over the next few years. At the end of Q1 FY23, we saw that the order book was record high at about 23,720 crores. So that's a very strong visibility across segments. And expecting KC to show a 15% growth for FY23, margins may in fact see an uptick possibly from Q3 of the current year because of lower raw material prices and new projects commencing. So looking at FY24 EPS of about 32, in fact, I have a price target of about 540.
Okay, all right, that's on KEC. Hi, Amrish, good afternoon. The pharma pack has been performing pretty well, I think, in the last month or so. But it's been a rank underperformer if you look at it in the last few years. Well, one of the stocks that's really been a big underperformer has been Strides. Any view on the stock? I ask you about this one because as we speak, there's a big green bar that's formed on Strides. So view on that one, or from the pharma pack, do you like anything?
No, in fact, Strides, I don't have much of a view. I don't track it very closely. But the other stocks which I track decently closely and worth buying even at these levels is, I think, Biocon, which has actually underperformed for quite a while and looks like it's more or less at the bottom. The other stocks which I've been recommending also in the past have been Lupin. In fact, just about 2 weeks back, we spoke about this and that's done decently well. Sun Pharma is the third stock which is there on my list. And a couple of others which I had recommended also in the past on the channel, Alembic Pharma. Again, that also seems to have bottomed out and has bounced back from those lower levels. So I think these are a couple of stocks which can still be bought because clearly I see some more upside from here. For example, something like a Lupin, I'm still having a price target of about 900 to 950.
What about Bharat Forge, Ambarish? Is there upside in Bharat Forge?
Bharat Forge, I suppose there is a decent upside in the longer run, but then with the sort of a bounce back which we have seen today, I don't see an immediate much more upside from here. There could be a bit more of momentum taking up possibly at the 5-7%. But I suppose that's it for the time being, because overall, for the export sector as such, and Bharat Forge has a decent amount of exports, I would see some amount of a correction as far as the export sector overall is concerned, especially commoditized exports. Looking at the sort of a slowdown which we are seeing, globally, I suppose over the next 2 to 3 quarters, we could see that slowdown, and that is going to also affect Bharat Forge. So I would say in the short to medium term, I think the upside is more or less capped. If one is looking at longer term, yes, I suppose one should look at a correction and buy this.
Okay, all right. Noted your view then on that one, Amrish. By the way, before we slip into a short break, some of these FMCG names aren't having a very, very great day. Godrej Consumers under some pressure. As we speak, Dabur as well has drifted towards the low point of the day. Let's slip into a short break. Final 10 minutes of markets coming up. Don't go anywhere.
Okay, this would go down as a bit of a disappointing session. There's still 8 minutes to go, but significantly off the, last 60-minute highest level, or, of course, from the day's high. We're at the day's low as we wind down this trading session, just at 17,331. I would say about 40 odd points away from Tuesday's high. So almost coming down to those kind of levels. Well, some opinion, and this is a sobering one that we got from Gautam Trivedi of Nepean Capital, who still is very cautious, says he expects more downside in the market as time goes on. Listen in.
I think downside is certainly left in this market. I tell you where I'm coming from. Again, in spite of all the stuff that we've seen, and of course, you've seen some degree of FIs coming back into the market, which was a positive briefly. Again, last month they sold almost $1 billion. So will India end up decoupling? I don't think so. What we see is the other concern, of course, is in terms of valuation. And again, I've said this before, India has, of course, always been one of the most expensive markets among the emerging markets and always the most expensive Asian market. But now we're at 20.3 times calendar 23 PE, which is more than double that of China's. MSCI China is now at 9.3 times. We could certainly revisit that. I don't know about going below that, but certainly revisit that. And the reason I say that is because we've tested that once already. Now, let's keep a couple of other factors in mind that, yes, the recession and the issues that are there in the West are not necessarily the same issues that we have back home in India. So let's get practical about that. The ability to support this market when that fall does come, and I hope it doesn't come, but assuming it does come, will be, I think, driven by how much more attractive other alternative investments are. Anybody who's in the export side of the business, and again, as we know, two of our biggest markets for exports for India, and not just for IT, but even merchandise exports, are the United States, i.e. North America and the European Union. So as a result, both of those which are currently undergoing economic challenges, I think I'd stay away from anybody who's in the export side. Avarti is the only real way of playing it. I wish Jio was listed, but that's not going to happen until the company takes a call when to do that. The other alternative is Vodafone, and that's obviously a very high beta bet if somebody does want to take it. And the last alternative, which is MTNL, unfortunately, even the government seems to have thrown in the towel for MTNL. So Bharti remains the only real way to play the telecom and mobile sector, and I would continue to advise investors to hold that.
All right, let's squeeze in some more market opinion. Earlier today, we spoke to Mark Matthews from Bank Julius Baer and Company. Let's hear out what he had to say.
Now the market is down around 20% so far this year. I think we are putting in a bottom. October historically is the month where major market bottoms occur more than any other month. And even if we get a recession, I think it'll be a mild one because the labor market is still so strong. There's still 1.7 jobs available for every one unemployed person looking for work. And so 20% decline in the S&P is really about what you usually see when you have mild recessions. I can't really say what it might be that causes the dollar to go down this time, but my hunch is that history doesn't repeat itself, but it does rhyme, and it will be going down in the months ahead. As for the oil price, $100 a barrel is possible given the production cuts from OPEC last night, and certainly makes one less confident about headline inflation going down, because the major reason for the headline inflation going down was the oil price. When bond yields in China start rising, that'll be a signal that better times are coming for the economy, or maybe stimulus is coming, and they're simply not going up. Maybe that's because nobody knows yet what's going to come out of the party Congress, but and nobody does actually. So I think we just have to wait and see. The uncorrelated ones with big domestic populations, India, Brazil, Indonesia, they have outperformed this year, and there is a lot of now speculation that the time is to sell those and shift into the kind of global growth ones that have underperformed, like a Taiwan or a Korea. And I can see both sides of the coin, but I would simply say that our long-term bet is on India, and even if it underperforms, say, a Korea or a Hong Kong over the next 6 months, because they have so much more catch-up to do, because they fell a lot and their currencies fell a lot more this year, the Korean one, at least. I would, India is our big bet for 5 years, not just for 6 months, and so we want to stick with it.
Okay, so I got them sounding cautious. Mark, from a longer-term perspective, Mark has been bullish for a long, long time, regular on CNBC-TV18. Well, let's quickly recap things up here. Amrish, thank you very much for joining us, as always. Appreciate your thoughts, ideas. KC International from Amrish today. So what do we have? Just a 50-odd point gain. and the Nifty ending at the day's lowest point. I mean, actually, the bank Nifty intraday also tells the picture. That also came up. I mean, it was a red bar, so the index sort of ending below where it started, and with a not even a 0.5% odd gain. Metals, IT, and real estate were the three indices which actually did the best. Again, there was selling pressure, but not so much. Overall market breadth, super strong. I mean, 2:1 in terms of NSE advances to decline, and so many names which we will get to in a bit did well. I'll just outline a few names from the metal space: JSW Energy, JSW Steel, Hindalco, Coal India, Tata Steel, and the IT sector, HCL Tech, Infosys, and Wipro, which did very well as well. Rima.
Well, even as the large caps gave up and the rally fizzled in the last 30 minutes, the mid-cap index is ending pretty much where it was, 1.25% higher in the mid-cap index. Talking about the big gainers, Bharat Forge rallied nearly 8% on the back of strong Class A trucks at record levels for the month of September. Persistent on the back of the JP Morgan upgrade, target price at 4,100 is a good 15% above the current levels. Zee Entertainment, Zee Media were the two stocks of the day on the back of the conditional CCI nod for the merger with Sony. You had strength coming through in IEX as well as macrotech developers known in Mumbai as Lodha Real Estate. These stocks ended higher on the back of strong Q2 business updates. On the losing side, AU Small Finance numbers look pretty good, but the stock saw a fair amount of profit booking and it finally ended in the red. So AU Small Finance Bank slipping almost 5.5–6% from the day's high. And a weak update coming through from GCPL, and that was one of the big drags today. The stock ending, Godrej Consumer, down close to about 4.5%. Nigel?
Well, the problem today for the Nifty was that the Nifty Bank, that gave up a goodish bit from the high point of the day. So the Nifty Bank goes home with gains of only around 150 points odd. But that doesn't take away from the fact that you had plenty of gainers from the broader market. A few of those names should come up for you. TPL Plastic, well, that stock was locked in upper circuit. Everest as well was higher in trade today. Greenlam was another stock that was buzzing around. HEG, well, that stock was flying away in trade today. HCC, well, that stock as well did move pretty well in trade today. And CMAC as well. So the short point is from the broader markets, there were plenty of gainers actually, and a lot of those stocks did pretty well. The headline index, though, a bit of a disappointing close. Though on a closing basis, at least we managed to close above that 17,300 odd mark. From tomorrow onwards, what we'll be tracking is the Nifty Bank. That's the one that's led the market higher. It's showing some bit of fatigue. Is it pausing or is it likely to see a bit of a correction? Well, time will tell on that front. But after the kind of run that we've seen, even ending high with a gain of around 50 points, well, that's something that the bulls will take. For the time being, though, we'll wrap up on this edition of Closing Bell. You don't go anywhere. Lots of guests lined up on our Thursday special. Big deal. You stay with us.
Powered by